Good morning, everyone, and welcome to today's webinar, Financial Aid Updates and Special Circumstances. This is part 3 of Fcan's How to Pay for College webinar series. I am Kathy McDonald, Assistant Director for Network Partnerships with the Florida College Access Network. A special thanks from Fcan to our cornerstone funder, Helios Education Foundation, and our supporters, Wells Fargo and the National College Attainment Network, for their generous support of the College Ready Florida initiatives and this webinar series. I am super excited to welcome on our webinar this morning guest presenter Kerry Warwick, who's Director of Policy and Advocacy with the National College Attainment Network. She leads NCAN's policy and advocacy work to promote policies that support students who are low income, first generation, or of color, not only access but also succeed in higher education. This includes managing NCAN's policy priorities at both the federal and state level. Warwick holds a Master's of Public Policy with a concentration in Education Policy and a bachelor's degree in International Affairs and History, both from George Washington University. Next up, I'm thrilled to welcome back guest presenter Daniel Barkowitz, who's the Assistant Vice President of Financial Aid and Veterans Affairs for Valencia College. Daniel has served in higher ed for over 30 years, including Director of Financial Aid at MIT, Dean of Financial Aid, and Associate Dean of Student Affairs for Columbia College and Columbia Engineering at Columbia University in the city of New York. Director of Operations and Training for the Massachusetts Educational Financing Authority, and Assistant Director of Financial Aid at Boston College. Daniel earned his Bachelor's of Science in History from Northeastern University and his Master's of Education in Human Resource Education from Boston University. Now, before we get started, a few quick housekeeping items. Excuse me, please submit any questions that come to your mind in the question box, which you should see in the right side of your computer in your dashboard. If you aren't seeing it, look for the little orange box with the arrow. You click on that and that'll open your question box back up. Second, please share what you're learning on social media. We love to hear what's resonating with you. Please use hashtag Fcan and hashtag TalentStrongFlorida so we can find you. Finally, this webinar is being recorded. All materials will be shared with you all within a week of the recording. You should see handouts in your dashboard that will also be emailed to you. If you aren't seeing handouts in your dashboard, no worries. You will get those following the recording. Okay, so I know we've got some new folks on today's webinar, so very briefly, our mission at Fcan is to lead the collaborative movement to ensure every Floridian achieves an education beyond high school and a rewarding career. Our vision is to build a Florida working together where education is the pathway to economic mobility for all. We do our work in 3 primary ways. First is through our local college access networks that support 82% of the state's population. These are place-based organizations made up of cross-sector community leaders who come together to create and strengthen partnerships that support the local talent development. Second, Fcan publishes research and data on evidence-based practices and policy opportunities to strengthen Florida's talent pool. Third, Fcan coordinates 4 College Ready Florida initiatives that provide schools and community organizations resources to help students continue their education after high school. Our work is guided by our 7 conditions for success, which you can find out more about on our website. Today's webinar is a great example of many of these, especially opportunity for everyone, clear information and guidance, and affordability. So with that, let's get started. For many students and their families, figuring out how to pay for college is confusing and stressful. So we're going to do a quick update here or a quick recap from the last 2 sessions, which is to help our students and our families understand that there's 3 main ways to pay for college. First is family funds. So that includes things like savings and earnings from work. The second is through financial aid, which includes federal, state, and school-based sources. And the third is through gap funding, which includes things like scholarships and other sources of funding outside of the school, like employer tuition assistance programs. So this is one of those handouts you'll see in your dashboard, but if you don't see it, don't worry about it. We'll send it to you. You can use it in helping students and parents see the larger funding landscape. So today we're going to focus in on that middle part of the screen, the financial aid part, because 4 out of 5 Florida college students receive some combination of federal, state, and college-based aid, which means understanding financial aid and what's available to students is really important in their planning for education after high school. In particular, 52% of Florida students are Pell Grant eligible. So for those that guide students in planning for college, it's helpful to know the latest updates on financial aid and policy and how it will impact students. So to help us understand what's changed with the latest budget bill and the pandemic relief bill, I welcome Kerry Warwick with Fcan. Now, Kerry, there were some big changes with this latest round of policy.
Yes, there were a considerable number of changes in the Consolidated Appropriations Act of 2021. And we're going to talk about a couple of them on a really high level today, but we're really going to focus on the changes to the FAFSA form and the federal needs analysis.
Great.
And let's see if there we go. The controls are working. I just want to thank everyone for having me here today. Great to talk to all of you in the state of Florida. We're actually going to hit 60 degrees here in Washington, D.C., so I'm excited that you're sharing some warm weather with us. And we're going to dive in on this bill that was nearly 6,000 pages long. And I'm still occasionally finding some new pieces that I missed in all of those pages, but I think we're going to hit the top items today. First, as I said, President Trump, or now former President Trump, signed this bill into law in December 2020. It's the basis of the bill was the Appropriations Act, which includes the 12 appropriations bills for the federal 2021 fiscal year. The most important piece for our work as part of those appropriations bills is the Pell Grant funding increase that was part of the Labor HHS Education Appropriations section, which increases the maximum Pell award by $150 to $64.95 for the academic year that starts this fall. Additionally, this bill also included a COVID supplemental relief package, which included $82 billion in education funding, with almost 23 of that being targeted for higher education institutions. The most important thing to know about those funds are, one, that institutions need to spend at least as much on emergency aid from this funding as they did from the CARES Act funding last spring, and two, that the eligibility parameters that were put on the CARES Act funding limiting those dollars to Title IV eligible students were not included and were specifically removed. So you will have some students who will be eligible for these funds who were not eligible for those CARES Act funding. Next, there was a SNAP eligibility change for students who have a $0 EFC or who are in an eligible federal or state work study program. They are now SNAP eligible. The U.S. Department of Education issued a Dear Colleague letter yesterday providing more information on this change and encouraging institutions of higher education to reach out to eligible students to let them know that they can now receive SNAP benefits. And then finally, there was a new emergency broadband benefit program established within the FCC, the Federal Communications Commission, that students with free and reduced price lunch eligibility or Pell Grant eligibility can now receive emergency broadband benefits based solely on that student eligibility. This project is still in the comment period. They're still building it out. And so we're watching this closely to be able to share when that program is eligible. Recipients will need to apply through their internet provider for that rebate. And then finally, the bulk of our presentation today is on the what we're calling the Fafsa Simplification Act. This exact version of Fafsa Simplification was not separately introduced into law, but has generally been referred to as the Fafsa Simplification Act, and it was included as part of this sweeping legislation passed in December. So first, looking at a really high-level summary of the bill. This is one of those slides where if this is the only thing, if you're going to remember one thing that I talk about, it's probably on this slide right here. So first, one of the primary goals of this legislative change is to reduce the number of questions on the FAFSA and to simplify the process for students as they apply for financial aid. So according to now retired Senator Alexander, this new law will reduce the number of questions on the FAFSA from 108 to 36. That's using the numbering on the paper FAFSA form. As part of that process, the expected family contribution will now become the student aid index. This is to reflect both the kind of misleading terms of EFC and also reflects that the calculation will be changing behind that ultimate number. And then second, the simplified needs test becomes exempt from asset reporting, which is basically what the simplified needs test does. There's also some expanded, they've expanded the criteria for who fits into this category. So we are going to touch on that as well. The second key goal of this legislation is a new maximum and minimum Pell eligibility threshold determination that will allow for early awareness. One of Senator Alexander's key goals in FAFSA simplification was to allow families to understand in advance if they may be eligible for some Pell dollars or a maximum Pell grant. That is why he proposed a two-factor Pell formula based on family size and AGI. The House Democrats were not on board with that approach, and so in what is good old-fashioned bipartisan compromise, they came up with these new minimum and maximum Pell eligibility thresholds that actually layer on top of the SAI to allow families to know at least a basis for their Pell eligibility. And so my presentation today is really divided into two sections. First, we're going to talk about the changes to FAFSA and the formula, and then we're going to talk about the impact to the Pell Grant program. And in particular, something to keep in mind is that the changes with the Pell Grant not only provide for early awareness, but it increases the number of students who are Pell eligible. About 500,000 students should become Pell eligible, and about 1.7 million current Pell eligible students will move from a partial Pell to a maximum Pell grant. And then the last and maybe most important thing for you to remember today is the effective date of these changes. According to the law, federal student aid has until the July 1, 2023, the beginning of the 23-24 academic year. That means that these changes need to be ready for the FAFSA opening October 1, 2022. So I know that this webinar series is really focused on what families need to know. Right now, I would say that families, for your direct outreach to families, I would not focus on these changes, because if they haven't done the FAFSA for this fall yet, they still need to do the current FAFSA, and the FAFSA that launches next fall for the following year will still be based on the current FAFSA form and will still use EFC. So this information today is really about informing programmatic work and helping institutions and college access programs know what changes they need to make coming down the line. I would say at this point, the family focus should stay with the old system until we know more from FSA about what these changes will look like. So we're going to start on the FAFSA side, as I said. So first, diving in a bit more on the questions eliminated. So first, 108 to 36 is a fabulous talking point. However, because skip logic will still be employed as part of the FAFSA filing process, particularly when we talk about that exempt from asset reporting pathway for certain families and certain students, the number of exact questions a student will answer will be based on their financial strength. Second, there are a number of questions on the FAFSA that fewer than 1% of filers have a non-zero response to. It means that the financial strength of most families are not impacted by these questions, so they will be removed. Third, there will be what we call barrier questions removed. The two most important ones are the prohibition on students with drug convictions from receiving federal student aid. That prohibition is now overturned, so those questions will be removed from the FAFSA. Second, selective service registration will no longer be required for federal student aid receipts, so that question will be removed. A reminder that selective service is not going away. That registration is still required under separate federal law, but having registered on time is no longer part of the FAFSA requirements. Fourth, it removes the number in college question from the SAI calculation. This question will still be included on the FAFSA because states and institutions use it, but the SAI will not be impacted by the number of students who are enrolled from any given family. And then finally, this law really builds on the Future Act of 2019, which was passed in December of 2019, and will automate the IRS data transfer. So the IRS data retrieval tool will be changing substantially. There will be some expansion in the fields transferred, such as family size, and the proportion of FAFSA filers who are able to use the DRT, including non-tax filers, will be greatly expanded. This also means that there is a significant change in the definition of family size under this new FAFSA, because the family size will now be determined by the number of dependents listed on the tax return, since that is a transfer field, rather than the current who is your FAFSA parent calculation. Next, this is the first time ever that written into the Higher Education Act is a list of questions that FSA is required to ask. So I'm not going to go through these individually. You will see that some of them are very specific, and some of them are broader categories that will probably include check all that apply type boxes underneath. The important thing, the important things to know here is that the law specifically states these questions may be asked. It further states that no additional questions can be added to the FAFSA that are not in one of these umbrella buckets. So this is, one of the areas where FSA will need to go back and forth with Congress to understand the exact intent of that part of the law, because it means that some filtering questions they've added in the past aren't necessarily on this list. So this is why trying to mock up exactly what a new FAFSA looks like is difficult until FSA works out some questions. And the last piece I'll just touch on this slide is number 8, that is bolded. You'll see there the race or ethnicity question. That question has never been asked on the FAFSA before, so that is the one question that Congress decided to add to this list. So that is a new piece, and it will use the census categories for race and ethnicity for that question.
Kerry, I'm going to jump in and ask you a quick
Sure.
question. Paula is asking for a clarification around the selective service registration. So
Yes.
Do male students not need to register for selective service in order to obtain federal student aid, or just not need to register by a certain time period?
They do not need to register at all. Now,
For financial aid, yeah.
For financial aid, the law governing selective service has not changed. They are still required to register or face the fine or penalty that comes with not registering under that law. However, but it is no longer tied into the FAFSA process or the eligibility to receive aid.
Great, thank you.
All right, jumping to the next slide, I want to talk a little bit more about the expected family contribution transition to the student aid index. So first, we will be getting rid of the EFC term. It will now become SAI. This was to better communicate to families the role of this final number that gets spit out on your student aid report at the end. If anyone feels really connected to the EFC term, there was a great article in the Washington Post talking about kind of good riddance to EFC, but I know as someone who's been saying those three letters so many times for so long, it's going to be a tough habit to break. Second, those who are eligible for maximum Pell grants will automatically receive an SAI of $0 or possibly less by calculation. So when we get to the Pell grant maximum award discussion in the second part of my presentation, any student who is automatically deemed eligible for a maximum Pell grant based solely on their family size and AGI will also receive a $0 SAI or possibly less based on the calculation. And then finally, for the first time ever, a student will be able to have a negative number here. So a negative EFC, or what will be called a negative SAI, which will go down to negative $1,500. This is an acknowledgement that frequently that the students with the most need have a need above the cost of attendance. So this will allow students to receive financial aid up to $1,500 beyond what their cost of attendance is. Now, they will not be eligible for a maximum, for any additional Pell dollars. The maximum Pell grant will still be the maximum Pell grant, but they will be able to receive other types of aid up to this $1,500 level. Non-tax filers will automatically receive this most generous number, and those non-tax filers will have their non-tax filing status confirmed by the Irs Transfer, which we hope is a big relief for verification as well. All right, so next, diving in a little more on the simplified needs test, move to exempt from asset reporting. Filers eligible for SNT or exempt from asset reporting. I don't know if we're going to call that EAR or not. DC really likes an acronym that makes a word, but that one's a little strange. So we'll see what that ends up being called. But the important parts to know here are that the AGI threshold for this lever in the FAFSA filing process is being increased from $50,000 to $60,000. If you are qualifying based on AGI, you also must need to use the simple tax form. You can't have one of these more complicated schedules. Means tested benefit recipients will automatically be exempt from asset reporting, and filers who are automatically eligible for the maximum Pell grant will also be exempt from asset reporting. So then finally, touching on some changes to FAFSA questions. For the changes in family size, this number will now be transferred over from the IRS, from the tax filings. Parents who are separated must be legally separated. We know this is going to be tricky because not every state has that status. And the transfer of the family size from the tax return will also be could be complicated for blended families where the student is not living with the parent who claims them on their taxes. So this is an area where we could do a really deep dive. It's the piece that I think, for all the simplicity we are gaining, this is the spot where in order to transfer this answer from the IRS, we're actually going to make it more complicated for certain families in some situations. And then additionally, the Secretary has been provided with some flexibility or authority for families who've had a change in family size since PPY to make some changes. And then finally, for independent students, the age threshold will still be 24, but it will be 24 as of the end of the PPY tax filing year, which means that most students will be 25 or possibly 26 going into the academic year that is based on the tax filing year where they were 24. And then finally, there are also some changes in cost of attendance calculations. I think the most important one here is that students who are living at home with their parents are no longer allowed to have a $0 cost of living, and just assume that the parents are going to continue paying for everything. I think that this is really important for covering students' basic needs, especially students who are coming out of a free lunch situation where they were maybe already receiving 2 meals a day in high school from their school. At bare minimum, students living at home must have 3 meals a day calculated into their cost of attendance. And so with that, I'm going to quickly transition to the impacts on the Pell Grant program. This is, I've got some example slides here, but the eligibility here for maximum Pell is really the meat of the conversation. And this is where the early awareness factor comes from. This formula layers on top of SAI and it overrides whatever your SAI is. So if you are a student who is eligible for a maximum Pell Grant based on your family size and your AGI in relation to the percentage of the federal poverty level listed here for each situation, you are guaranteed a maximum Pell Grant regardless of what your SAI is, and you are guaranteed a $0 or negative SAI. And you can see there are 4 different categories here. So families with dependent, there's consideration that family size does not, that your family size, for example, a family of 3 looks very different if you are a dependent student with 2 parents, a dependent student with a sibling and a single parent, or you're an independent student with a spouse and a child, or you're an independent student who is a single parent with 2 dependents. Looking at minimum Pell calculations, you will see same approach. If you meet this threshold, you will be guaranteed at least the minimum Pell Grant, 10% of the award. It is possible that if your SAI says you get a higher Pell Grant, you will then get the higher Pell Grant. But you will know that you are at least at minimum Pell eligible, which tells a student, 1, they're going to receive some aid, but 2, if there are state or institutional programs that require Pell eligibility, they will also know that they're eligible for those programs. And then additionally, you'll see broken out here that there is a 5th category for independent students, single parents, parents but married or living together, and then independent students who are not parents on there finally. And then last, I'm just going to show some example projections. I know these are tiny. The exact numbers are not the main message. The color coding is the main message. This would be a back end table. This is an example of this year, so definitely do not use this with families. It's just an example of if this had been applied to the current 2020 federal poverty levels, and it shows that the cross of the family size and the income, and how you'll be able to tell a student you will definitely get maximum Pell, you will at least get minimum Pell, or we don't know if you're going to be Pell eligible, you have to file the FAFSA to figure that out. To clarify, every student still needs to file the FAFSA to get a Pell, but it takes away some of that black box nature of filling the FAFSA and not knowing whether or not you're going to get a Pell until you get to the end. So these are the examples for dependent students. I went one too far again. These are the examples for independent students. You can see the tiny box there on the bottom is independent students who have a family size of 1 or 2, where the 2 is a spouse and not a child. They have the least generous kind of flow chart there. And so this is the independent student example. And then finally, I think the most important relevant piece here is that the law writes in that federal student aid must develop early awareness tools and consumer test them, so that they must consumer test them with families. So they're not going to see color-coded spreadsheets. They should have some, some tools that are like an app that are built into the FSA website that are a little easier to use. And then finally, I realized I moved a bullet from that last slide that wasn't deleted there. Just some quick additional provisions in the higher education agreement. Pell restoration for incarcerated individuals, removal of the SULA cap for subsidized loan based on length of enrollment, restoration of Pell eligibility for successful borrower defense claims, discharge of capital financing loans for certain HBCUs, and codifying professional judgment into law, which is where I turn it over to Daniel to talk more about that PJ piece. Thank you so much for your time, and I look forward to answering questions at the end.
Great, thanks, Kerry. Yeah, Daniel, let me switch it over to you. But 1 second, Kerry, Nina asked, are schools going to keep the same definition for need replacing EFC with SAI? So for example, cost of attendance. Actually, Daniel, you could probably answer that too.
Yeah, the answer is, yep, it will be the same need definition. As Kerry indicated, SAI is just a rebranding of the EFC, but there's been no change to the definition of financial need. So that still remains cost minus the new figure, whatever that figure is now.
Okay, great. Let me switch controls over to you. There you go. And now you've got them. Yes. Great.
So Kerry did a great job of walking through the changes coming in 23-24. And as a reminder, they're not coming until 23-24. So families who are facing challenges now, how do you help them? And so I'm going to pivot a little bit and talk about what do we do right now for families who are in difficult situations? How do we help them? And to do that, we want to orient by looking at how the process works currently in terms of fiscal years and academic years. And the example I've given you here is for this upcoming school year, the 21-22 school year, for families applying for admission in financial aid to start this August or September, what income are they using? And as a reminder, several years ago, this is back probably 5-6 years ago, the system changed to use what we call prior year. So up to that point, we were using the immediately preceding year, but now we use, in a sense, information that is 2 years old. A reminder that for students applying for 21-22, they and their parents are using 2019 income, which they reported on tax returns that were filed from January through April of 2020. Actually, we know there was an extension of the tax filing system last year through July, but generally January through April. And that FAFSA forms begin filing in October October of 2020 for that following August. So almost 2 years old by the time the bill comes due. And what do we know about what's happened from 19 to 21? Well, our world has turned upside down. So we're in the middle of this pandemic. Lots of families have had losses of income. Lots of families have had unemployment. So how does the system work? What are the definitions around so-called special circumstances, or as we refer to them in financial aid, professional judgment? So my task for the next couple of minutes is to walk through that professional judgment piece with you. For those of you that haven't seen one of my sessions before, I'll also give you a clue. The little blue, it'll change color, but the little label on the bottom of the slide is a link to a blog post that I have diving deeper into these topics today. So I keep a generalized financial aid blog at moneymanblog.com, and you'll see a link to information as we go through if I've talked about it on the blog. So if you want to read more, you can feel free to reach out there and share that with your families and others as you go. So, okay, so we have a sense of what year we're talking about, but what happens if the income changes? What happens if, God forbid, there's a death of a parent or there's a loss or gain of income? The question will be based, or the answer will be based on when the occurrence happens. So if a parent passes away before the FAFSA is filed, then at the time of filing, the surviving parent reports information just on their income. Even if they file joint taxes, they separate their income from the deceased parent and only report on their income and their portion of assets. If there is no surviving parent, if the student is now an orphan, they're automatically considered independent, even if they're under 24 years of age. If the death of a parent happens after the FAFSA is filed and there is no surviving parent, again, the student is automatically independent, and they just need to let the school know that and provide documentation. Otherwise, it's considered a professional judgment request. And I'll define what professional judgment is in a second on the next slide. What about loss or gain of income? Again, remember, income's reported based on that prior year. So if that prior year, let's say in this example, 2019, had some unusual income, maybe there was a settlement or gambling winnings or IRA distribution, then that is a situation where a student might want to request a professional judgment. And same, if a parent's lost employment in either the prior year, so in our example, 2020, or in the current year, 2021, that would be a prompting for a professional judgment request. So let's talk about what is professional judgment. Professional judgment's actually in the Higher Education Act. It's written in law, and it's a unique feature of financial aid, which gives financial aid administrators like myself the ability on a case-by-case basis to adjust information used in answering the FAFSA questions. And we'll talk about the different types of professional judgment in a second, but it gives financial aid administrators wide latitude to make decisions that are appropriate for that individual case. One of my early mentors in financial aid said to me, the best financial aid officers understand that financial aid is a combination of a science and an art form. The science is the needs analysis, the formula. The art form is understanding the formula doesn't work in every case. The professional judgment is our ability to help sculpt and shape the individual circumstances for an individual student who doesn't fit in the frame or mold of that formula. Professional judgment is not regulated by the Department of Education. They're actually not allowed to issue regulations on professional judgment. And while it is subject to audit, we're given wide latitude in terms of how we work on individual cases. The challenge of professional judgment is because there are no national standards, each financial aid officer uses their individual judgment to make a case. This may mean that the same situation would get different answers if asked of different schools or even different financial aid officers at the same school. And so I talk a little more on the blog about how best to prepare yourself to submit a professional judgment for review. Let's talk about the different kinds of professional judgment. There are actually 8 different kinds of professional judgment that we are granted specifically. One of them is the ability to modify cost of attendance items. So where a student might have unusual expenses, the financial aid administrator can modify the cost of attendance. They can modify values of data elements used to determine that family contribution, that EFC, or ultimately that SAI. We can offer a dependent student unsubsidized Stafford without requesting parent data on the FAFSA. If a dependent student says, I can't get my parents to complete the FAFSA, the ability to offer that student a direct loan unsubsidized would specifically be professional judgment. There's some examples of sale of assets because of foreclosure, bankruptcy, and voluntary liquidation. The cost a student might base on their disability. Another area that we're not going to talk about today, although I do talk about it on the blog, is the ability to override the dependency status of an otherwise dependent student to allow him or her to be considered independent If they're in a situation where there is a breakdown in the family dynamic, that falls under professional judgment. In some of the earlier presentations, we've talked about satisfactory academic progress. So the ability to grant an appeal is considered, of that status, is considered professional judgment. And one that is very seldom used, although it is technically a form of professional judgment we're allowed, is the ability to refuse to certify a direct loan for a student, or to only certify for less than a maximum amount if that's considered by the financial aid administrator to be in the best interest of the school, the federal government, and the student. So those are the different types of professional judgments. We're going to focus on the questions relating to the EFC formula specifically today. What are the limits on professional judgment? And again, I'm not going to go through every single one of these. You can read these at your leisure, but I will highlight a couple of these. Financial aid officer is not allowed to just simply say, the bottom line contribution doesn't feel right, let me reset that number. So if a family goes through and gets a $15,000 contribution, I can't simply say, I think it's really $5,000. I can't make that kind of adjustment. I have to adjust an individual data element. I cannot make across the board changes. So each analysis has to be done individually. I can't take a category of students and say, for example, we were closed for a period of time, and therefore everyone has lost the ability to come to classes. So let's change everyone's contribution by doing this. We can't do that. You have to do a one-by-one analysis and a one-by-one decision. You may decide that everyone in a category gets the same treatment, but you have to do it individually, one at a time. And you can see the one that we often get is you can't override dependency for one of these 4 reasons. If a parent refuses to pay, or isn't willing to provide FAFSA data, or doesn't claim their student, or the student is self-sufficient, we can't call that student independent for any of those reasons. So there are a couple of musts and there are a couple of shoulds. What are the musts for financial aid officers? We must consider each decision independently. As I said before, you can't make adjustments for an entire class or group of students, but you can make the same adjustment each time in the same decision, but you have to look at each one individually. You must be able to show, I must be able to show sufficient documentation for every decision that I make. So if a student, if in audit, an auditor says, why did you make this decision? I have to show proof of documentation as to the reason why. What is sufficient documentation is not clearly defined. That's up to the individual financial aid officer. So some financial aid officers may request a pay stub. Some might want a letter of unemployment. Some might want a letter of separation from the company. Some might want the current year tax return. Each financial aid officer can make their own decision about what is considered acceptable documentation, but documentation has to be collected. There are a couple of shoulds. It should be consistent and fair, and we should explain on our website how to request a professional judgment review. I know many colleges have updated their websites, Valencia included, to put more front and center the process for professional judgment, because we've seen a huge growth, almost a doubling of the number of professional judgment requests this current academic year from students and parents facing difficulty. What about income year? So we talked about prior year or prior year. What are the income options? What kind of options does a financial aid officer have? And the answer is it's basically unlimited as long as it's a 12-month period. So let's walk through this scenario. So again, let's say a family had basic income, standard income in 2019, and at some point in 2020 or 2021 has experienced an income reduction or an income disruption. What can the financial aid officer do? Well, the financial aid officer has options. The base year, the one that FAFSA is based on, is 2019, but they could request a prior year. So they could look at 2020 income. Given where we are in the cycle right now, some financial aid administrators might even ask for the 2020 tax return now to prove what the income is for 2020 as a way to document exactly what the income was for 2020. Others might accept W-2s or whatever other documentation might be available, But it's reasonable, especially after April 15th, it'd be reasonable for a financial aid officer to request specifically the 2020 tax return to document the income the family is claiming. Another option might be to do a projected 2021 analysis. So if a family came to me now and said, well, I lost my job in December of 2020, it's not going to be very helpful for me to look at 2020 income. I might work with the family to document what they think they're going to earn for 2021 and to project forward. The financial aid officer might ask for current pay stubs, might then ask as a subsequent request for that final 2021 tax return to be turned in before next spring's aid is released, but that is an option. There's also an option to use a calculated year from July to June. Really, any 12-month period is an option for a financial aid officer, as long as the analysis is based on 12 months. It could be October to September. Really, whatever the calendar year is not a requirement. It doesn't have to be fiscal year. It's any 12-month period in the best interest of the family that the financial aid officer determines they wish to use to complete that analysis. There is a concept that the income year should be done by the time the enrollment year is done. So it would be unlikely for me, for example, now to use a 2022 projection for that calendar year, because 2022 will last through December, and the year I'm analyzing ends in June of 2022. So it's unusual that I project farther than the actual year itself. There's often a challenge, though, in that spring semester. So let's say a family loses their job in spring semester, or to push it back a year. Right now, we're in 2021. What happens if a family loses their income now? They've already paid their spring bill. There's not a lot of wiggle room for me to help them for the current year, but I might suggest that they do a professional judgment for the following year as a way to be more accessible and helpful for them. Again, as you see here, any year that a financial aid officer considers as the base year is acceptable. There are not regulations or guidance on this. It's up to the individual financial aid officer. I'm going to end and close with a couple of slides that are very dense in text, and I apologize for this. But I wanted to show you specifically what the federal guidance has been to those of us who work in financial aid about professional judgment during this COVID-19 era, so that you could see what we're being told. And there are two particular notices that I want to draw your attention to. One from April 3rd, and the other that was just recently issued in January. So the April 3rd guidance from 2020 reminded those of us in the financial aid office about the ability to make those case-by-case basis adjustments to the cost of attendance or the EFC items. And they encouraged us to use professional judgment more regularly in the case of the COVID-19 pandemic. Specifically, the reason this is important is because there is a concern among financial aid officers that the more you use professional judgment, the more likely you are to get a federal review by the federal office, who will come into your campus and look at the way you do your financial aid. And we are subject to federal review. They're called program reviews, and the federal government's silent on what are the determinations that pick individual campuses. There is a rumor that the number of professional judgments a school make might be considered. And part of this note is making it clear that they were not going to look at professional judgments as a factor, because they knew that there would be more and more professional judgments in this current year, given the current circumstances. The other thing that I wanted to draw your attention to as we look at the January notice, specifically, and let's see if I can move us. There we go. In January 29th, there was another update on professional judgment, specifically saying that financial aid offices can use documentation of unemployment to actually reduce a family's income all the way to zero. And although that was always something financial aid officers could do, this codified that and put us specifically on notice that this is an area that we could actually reduce, in the case of unemployment, a family's income to zero and essentially make them maximally eligible. That is a financial administrator's option, but in January, this issuance was provided to, again, make sure that financial aid offices knew that was an option for them. Finally, what I'll say is going back to the good work that Kerry provided in the initial slides she identified. One of the other pieces coming out of the Consolidated Appropriations Act is a requirement that financial aid offices participate in professional judgment. Most of us do, but right now there is no requirement the college offer professional judgment. That will be changing under the new Consolidated Act, and each of us will have to have a professional judgment process. I would say over 95% of us do today. But if your student is struggling with reaching out to a college, again, that may change as we move forward. So with that, I will turn this back to Kathy to lead us through Q&As.
Great, thank you, Daniel, and welcome back, Kerry. We have a few questions. So I think this one is for Kerry. Lords wants to know, has FSA looked at providing dollars for childcare stipend as it was part of the awarding of FAFSA years ago? There's obviously a high need for this, as we know there's so many adult learners that are participating in higher ed.
I don't believe FSA has a bucket of funds for that. I know that Congress has been very interested in the C Campus program. That is funding to institutions to provide on-campus child care, and that there have been many proposals to expand that as well as increased appropriations. But I haven't heard anything about a return of funding directly to students to cover child care. Child care can be part of the cost of attendance calculation for students who have dependents.
Great. It sounds as though when the submission of special circumstance requests may influence the ability to receive funds based on when the request is submitted for professional judgment. So this is from Patrick. If later in the year he's asking, might the Pell Grant funds no longer be available? It's my understanding Pell Grant doesn't run out, but other forms of financial aid could.
Correct. And so one of the best practical advices is to submit the professional judgment early if possible. But to your point, Pell does not run out, direct loans do not run out, and some institutions actually save some funds, specifically in the era of the HERF funds that Kerry was talking about, to address some professional judgment issues. So that's going to be an institutional decision, but there are funds that don't run out. Additionally, it's never too early to submit a professional judgment request for the following year. So if students are working in a current year, they should actually work on both simultaneously, the current year and the following year, so they get at the front of the line as soon as possible.
Oops. Sorry. So I'm going to have you guys, one of you has your hand on my mouse there.
Sorry. That was my fault. I didn't realize I could still control it. I thought it was only one at a time.
Yeah, I'll try and get it back. Okay, so for the academic year 2021, can we also use 2020 tax information since so many students were affected by the pandemic?
Absolutely. So again, that may be, you can't when you fill out the FAFSA. So to be clear, the FAFSA requires the prior year, but that is a situation where you would reach out to the individual school. So again, the 2020 to 2021 academic year uses the 2018 tax return, but the individual financial aid officer could clearly have a conversation to look at the 2019 tax return, the 2020 tax return. There are lots of options here to document, and that's where that individual student or family would reach out to the financial aid officer for a professional judgment.
Okay, great. Cami has a really interesting question. Who funds the additional money given through professional judgment, the college itself or the government?
So it depends on the source of funding. For Pell Grant, it is the federal government. For direct loans, the federal government. For other programs, it may be college-based. So it really is a source dependent. And I guess the thing I want to correct in that question is it may be possible for professional judgment to be approved and no funding be available. So there's separate conversations, right? One is, what is the right family contribution? The next question is, what funds are available to support that family contribution? So if a student moves from not Pell eligible to still not Pell eligible, there may be no change in the award, but the professional judgment itself may be accomplished. So they're different decisions. One is the professional judgment decision. The second is the funding.
Yeah, great. Okay. A question we get a lot is what help is there for undocumented students and or their parents? I'm going to talk a little about that.
I'll tackle that because we have a fair number at Valencia of undocumented students. A couple of things. First of all, keep in mind that under current statute, the undocumented students who have resided in Florida and have taken classes in Florida in high school, graduate from a Florida high school, qualify for in-state tuition. That is a provision that is in current law. So that's one piece. The other piece is a reminder that lots of foundations and other private associations provide funding for undocumented students. Best advice, check with the individual college to see what might be available. Take a look at some of the scholarship searches to see, but there are private resources and potentially college resources. No federal aid. The third piece is remember that when we start talking about undocumented students, we have to remember that not every non-citizen is undocumented. Often confuse the statuses. There are lots of eligible non-citizens and they're ineligible non-citizens. You want to make sure you understand what are the eligibility rules before you say to someone who says, I'm not a citizen, well, then you won't qualify. That may not be true.
Yeah, okay,
Karen,
great.
would add to that?
No, I think that you covered it all. I guess the only related piece, because I heard the mention of undocumented parents, is that we are anxiously awaiting, and I'm going to address this because I've gotten it in a lot of other questions and other presentations, and I realized I didn't mention it on my slides. But in terms of the Irs transfer, we've had a lot of questions about whether eligible students who have an undocumented parent who uses an ITIN will be able to transfer their information. I've talked to a lot of folks who say, well, I don't see why not, but we don't actually know if IRS and FSA will make that decision. But we're watching how a lot of these FAFSA changes will impact mixed status families and hopefully make FAFSA a little easier for them. But any Pell eligibility for currently ineligible students will require additional legislation.
And this brings up a point. Thank you for bringing up parent. I just want to reiterate, it's not the parent's documentation status that matters. It is the student's documentation status. So a student may be a US citizen or eligible non-citizen with parents who are undocumented or international citizens, and that student would qualify for federal aid. It is the student whose citizenship or eligible non-citizenship is the important piece. They can still do a FAFSA with parents who are not, as Kerry said, not themselves documented or are not are foreign foreign citizens. There's no problem with that.
Great, great. Martha's sharing the dream.us is a great resource for scholarships for undocumented students. The other thing I would throw out there, which we covered on our scholarships webinar a month or so ago, is local community foundations usually do not discriminate based on undocumented status. So that's always start with your local community as well, in addition to your institution that you're planning to apply for. Okay, we only have 2 minutes left, but we are still getting some questions in. So we are going to hang on for a few more minutes and try and get through as many questions as possible. For those folks who need to drop off right at noon, please feel free to do so. But if you want to hang on and listen to some of these additional questions, we are going to make time for that. Okay, so one of the next things that came up was how Lisa's asking, how does the professional judgment process start? Is there a form at the college financial aid office on the website? What does that look like, Daniel?
So again, that's going to vary college by college. There is no regulated process for this. So where I would begin is look for the words professional judgment or special circumstances on the college's website. See what it says in terms of the process. If it's not defined or not covered, then reach out to the financial aid office directly, ask to speak to a counselor or advisor, and ask the question. Again, many of us, so I'll define what we did at Valencia before the pandemic and after. Before the pandemic, you had to call us and ask, and that we had a conversation, and that started the process. Given the volume and the numbers we anticipated and we've seen, we've put the entire process now right on the web. We've put our form on the web. We've put everything on the web. so that students can look at it, understand it, and fill out the form directly. Many colleges have made that change as well, but it's going to be college by college determined, especially for students who are in their enrollment cycle right now, may not have decided which school to attend. It's also important that you apply for professional judgment at all of the colleges, because each college you're looking at may make a different decision, and you want to make sure to provide the documentation to each of the individual colleges so they can do that individual analysis. There is no group decision around this. Again, remember, it's individualized, and because of that, it's highly unregulated and highly localized.
Yeah, great advice there. You know, Rose brings up a really common thing, which I'm sure you see in your office all the time, Daniel, is working with students whose parents refuse to, you know, because of family difficulties, they're not supporting the student. In the eyes of financial aid, the student's not independent, but the parent will not fill out the FAFSA section. Thoughts?
So first, I think it's really important in the conversation with the student and their parents to separate out the two. So many families confuse filling out the FAFSA with paying for college. While I understand the confusion in connection, you can fill out a FAFSA as a parent and then refuse to provide money. That is your choice. So it only harms the student if you're not willing to at least complete the FAFSA. So in my conversations with families, that's where I begin. So I sort of say it's like the difference between filling out a mortgage application and actually starting to pay the obligation or signing the actual promissory note. You've never signed anything saying you're going to pay. You've simply said, here's my information to determine whether or not I'm eligible, whether or not my student is eligible. So that's step number one. Step number two is diving a little deeper. So sometimes I still get resistance, and then the question is, what's the underlying issue here? And in those situations, if there's truly a breakdown in the family dynamic, then I'll move to something like a dependency override, because sometimes that's a situation that masks a whole other level of family trauma between the student and parent. Filling out the FAFSA is just a symptom of that, and often there are deeper rooted issues underneath that we need to surface and uncover. Sometimes I feel like a financial aid officer, my job is to ask poor people to prove they're poor and to ask people in pain to tell me why they're in pain, because that's unfortunately what I do. But this is an example where you have to share the pain with me so I can help you through whatever situation it is. So again, advice to students and families, be as transparent as possible in those situations so the financial officer can help you.
Great, Kerry.
Yeah, I would just add kind of on that, the step two piece, that's an issue that has come up with Congress a lot. And so, one of those, never ending list of things that were in this bill is the addition of a new conditional independent student status that was specifically designed for students whose parents refuse to participate in the FAFSA process. It's really designed, it is designed for situations where a student is most likely out of touch with the parent, but still legally belongs to them. So maybe you're living with an aunt or a grandparent, and you haven't been in touch with your parent for a couple of years, but there was never any legal status change of your dependency or of your legal parents. But I have a feeling that there will also be some affluent families who just refuse and see what happens with that status. But and that it's also a big question mark to me exactly how that's going to work. But it is something that we hope as these other changes come in, that students who are in some of these difficult situations have a few more options.
And there are two outcomes, right? One outcome is the student who simply can't get a parent to provide FAFSA data can qualify for an unsubsidized loan, but that's all they can qualify for. If you can document with the financial aid officer that there's a breakdown in the family relationship, then the student can qualify as independent for things like Pell and subsidized loan and other sources of income. So to Kerry's point, where the tweaking is around the application process. Student will still have to do that independent appeal to try. And we potentially could have a whole conversation. I'm happy to. And Rose, if you want to reach out to me, I have a session just on this one topic where, I'm happy to have a deeper conversation on what constitutes a satisfactory grounds for a dependency override.
Okay. And, I think somewhat related to that, Chantranice is asking, can professional judgment affect Pell eligibility?
Absolutely. So when you do a professional judgment and reset the family's family contribution based on new data, a student might go from non-Pell eligible to Pell eligible, or they might increase the value of their Pell. So absolutely, that professional judgment does reset the base formula, base number used for all of that awarding.
Yeah, okay, great. Holly was asking in our one pager on how to pay for college that, we were saying that for merit-based aid, you don't need a FAFSA. But you and I both know sometimes you do, depending on the institution or depending on, and it's my understanding a lot of community foundations and others are starting to require a FAFSA, even for merit-based or talent-based aid, in order to encourage students to access the rest of financial aid they might be eligible for. But do you want to comment on that further, Daniel?
Yeah, so there are two main categories: need-based and merit-based. But to your point, there are merit-based programs that rely on need as well. So always in a family's best interest, I would argue, to do the FAFSA. There are few cases where it will have any sort of derogatory impact. I would say do the FAFSA the first year at least, just to get the process started, understand your contribution ability or what the college is expecting, and it opens up more doors.
Yeah, great. Thank you. Okay, so I'm going to wrap us up here. So for those of you who are still on with us, I hope you found this session helpful. Lots of dense information there, and so thrilled Kerry and Daniel could join us because, there's a lot there to unpack, and they truly are the experts to do that. I hope you'll join us for the next Part 4 of the series, which is the FAFSA verification update, reducing melt with a more targeted approach. We're welcoming back some of Kerry's colleagues from NCAN who did an updated study this last year. They're going to be sharing their findings from that study, which was, I found fascinating, some of the ins and outs that they were able to identify that can also help us with potentially some policy recommendations moving forward. And then how to help those students who are flagged for verification. I also welcome you to join us tomorrow for our very first virtual briefing. We're going to be launching Fcan's Tech Express case study. And so our executive director, Charlita Richardson, will be leading that conversation tomorrow, 11 to 12. So I encourage you to register if you're not already, if you have not already done so, and or subscribe if you haven't. That way you make sure you get all of our updates with upcoming events like these. So many thanks to Kerry and Daniel for helping us understand how financial aid is changing pretty substantially over the next few years, and how we can be more responsive to the changing student needs and family needs during COVID. It's a critical time for us to be helping our students, and these two were truly the experts we needed to help understand this. So many thanks to you both for joining us, and to the rest of you for dialing in today. We hope you found it helpful, and stay safe out there. Take care. Bye.